Today is the day, the moment we have all been waiting for. Yesterday, we unveiled Safaricom as the second best listed company in Kenya over the last 5 years. Today, we unveil the number one. My name is Pius Mushiri Mugo, the Managing Director of Nabu Capital, and you're watching Invest in Africa. The number one, the best, the shocking winner of our top 5 best performing listed companies in Kenya over the last 5 years is Kakuzi Limited. In 2013, you could have bought a share of Kakuzi at 95 shillings per share. Today, you can only buy the share of Kakuzi at 310 shillings per share. In 2013, you could have bought Kakuzi in its entirety at 1.4 billion. Today, it will take you 6 billion shillings to buy the entire of Kakuzi. Kakuzi Limited is in the export business and primarily deals with avocados, pineapples, macadamia nuts, livestock, and forestry. And their primary revenue line is from avocados. So what could have happened to trigger a 259% increase in share price over the last 5 years in a very, very tough operating environment? So the big factor that we could identify was, number one, they probably had what you'd call a grossly undervalued land bank. In 2013, as I've said, you could have bought the entire company at 1.4 billion shillings. But let's look at what Kakuzi holds. Kakuzi has 12,000 hectares of land, and that translates to about 29,000 acres of land. If you work the numbers, then that also further translates to 48,000 shillings per acre. And that, I think, is probably what really appetized the investors. And if you look at the area in which it owns the land, then you can see that that particular land was seriously undervalued from a stock market point of view in 2013. The second thing that could have triggered that is just the primary product that they sell, which is avocado. Over the last 5 years, they've had 2 upswings in favor of global avocado prices, and that boosted their revenues over that period. The third thing that happened is that, given they are an export business, the Kenya shilling weakened against the dollar from 86 shillings to today's about 1 or 2 shilling per dollar. And they have been able, it means the dollars that they have been able to bring to the country are valued at a much higher value than they would have been valued 5 years ago. Fundamentally speaking, the question is, do the numbers support the rapid rise in the share price of Kakuzi Limited by a whopping 259%? And my answer is an absolute yes. If you look at their revenues in 2013, they were just about 1.4 billion shillings. And the last full year numbers, they reported a 2.8 billion shillings in revenues. That's doubling their revenues over a 12-month period. If you go below the revenue line, it even gets more interesting, because the EBITDA, or the cash generating power of the business, has improved significantly. In 2013, they were generating 207 million shillings. And the last full year numbers, they were able to generate 922 million shillings. That is a multiple of 4.5 times in just 5 years, meaning their cash generating power has improved much faster than even the revenues, and investors care a lot more about cash than even the revenues. The profit of the business has also grown much faster than the revenue line, and in 2014 they were able to generate 165 million shillings in bottom line. And the last 12 months that they reported their numbers, they were able to generate 592 million shillings. That's about 3.6 times multiple over a 5-year period. So yes, there are numbers that are supporting the rapid rise in the share price, even besides the appreciation in the value of the land on which they plant. Kakuzi Limited has outperformed over the last 5 years, and every investor is now wondering, is it likely to outperform in the next 5 years? And there are a couple of things that I want to point out in this video that every investor, I believe, must pay attention to. And number one is the key asset that they own, 12,100 hectares of land or land bank, which, if you go by today's market cap of 6 billion shillings, it translates to 205 shillings per acre valuation, which, if you just look at it without much analysis, it is really looking like a real undervaluation, and therefore it is possible that this could still be a reason why this company share price will continue rallying for this price to converge towards what would be as close as possible to the market prices in the location where this land is located. The second thing that comes to mind is, will there be a potential delisting in the next 5 years? And we have seen Ravi Pingo go through this path over the last 5 years, and the key factors that the owners of these agribusinesses are contending with is the fact that whatever they are planting on the land is not as valuable as the land as the land bank which they hold, and therefore it tends to cause the company to be undervalued in the stock market, and therefore a company of this nature could actually be subject to hostile takeover. The third thing, speaking of hostile takeover, in fact, there is already an attempted hostile takeover bid on Kakuzi. A gentleman going by the name of John Kibungi, I think John Kibungi, and friends have been mobilizing shares of Kakuzi over a period of time, and I think they've risen, their stock has risen from just a stake of under 3% to a stake of just about 29%. And that tells you people are really looking at the value of the land that Kakuzi is holding, just besides the operational activities that they undertake on a day-to-day basis. The fourth thing that comes to mind is the avocado prices. Will the avocado prices continue to swing in favor of the sellers or marketers in the name of Kakuzi and other competitors in that space? I think this is one of the triggers of value appreciation over the next 5 years. The final point is the Kenya shilling against the dollar. Will the Kenya shilling withstand or stand on its ground, or will it weaken over the next 5 years? And there has been a lot of talk of a growing twin deficit problem in Kenya, and the potential of that translating to a weakening of the Kenya shilling. If that weakening happens, then it will be in favor of the business because of its export, or rather largely export-oriented business. So those are the 5 things I'd want to leave you with as investors, and thank you for watching. I hope this has been useful to you, and I would like to know what you think about Kakuzi Limited over the next 5 years. Feel free to engage us on the social media platforms that are displayed on the screen, or you can also come to our offices at International Lifehouse, 5th floor, and we'll be more than happy to exchange more information on this particular subject. Also, you can write to us on the email address that is on the screen, or you can even call us on the phone number that is on the screen. My name is Pius Moshiri Mugo, the Managing Director of Nabo Capital, and you're watching Invest in Africa.